Hello, I'm Fran Radano, Fund Manager of the North American Income Trust. Dividend growth typically correlates to earnings growth, and while earnings growth for the current year remains fairly muted, the stocks in the North American Income Trust continue to see mid to high single-digit dividend growth rates given their consistent cash flows and strong balance sheets. Over the next year, dividend growth seemingly has a wider range of outcomes depending on whether the U.S. economy enters into a recession or whether it in fact does have a soft landing, which has been oft talked about lately. The current consensus feels as if a soft landing or something more benign will be occurring. However, we're always testing our assumptions and we tend to be a bit more defensive on the margin given the downside risks in a recession. And also of note, in 2020, the first year of the pandemic, the North American Income Trust only had one dividend cut. It was roughly 16-17%, and that company has subsequently grown their dividend above that pre-pandemic level to all-time highs. So when we think about whether FAANG stocks will pay dividends, I think when we look at the non-dividend paying FAANG stocks, I don't think they plan to initiate a dividend anytime soon. I think that they're really forced to reinvest in the business in order not to be disrupted. And generally speaking, they prefer to return cash to shareholders via share repurchase as opposed to a dividend payment. That's not true for all FAANG stocks. Apple does pay a modest dividend, but again, they're very much share repurchase focused. Microsoft is a little bit more balanced. They have a very modest 80-90 basis point dividend, and they also reduce the share count maybe 100 basis points a year. Beyond that, there's really very little as far as return of cash to shareholders on a sustained basis, and I don't think we would expect to see that anytime soon. And whether that's the right decision or not, it's not for me to make that call. But I wouldn't expect them to go that route, despite having strong cash flows and good balance sheets. I think when we get the question of valuation, it's an interesting one because I think when investors look at the market broadly, they see the U.S. market trading, the S&P trading over 20 times forward earnings. They see above trend inflation. They see interest rates that are above most we'll call it short to intermediate term averages. And that looks expensive. And I think what we need to do is step back and look at the market more broadly. Growth stocks on the whole are trading roughly a 2 standard deviation gap relative to value stocks. So these growth stocks are trading 26, 27 times forward earnings, whereas value stocks, we'll call it 14, 15 times forward earnings. So a very wide gap there, especially in a higher inflation rate, a higher interest rate environment. Where value stocks would generally be more favored given the return of cash to shareholders. And I think when you look at the North American Income Trust, we're trading on roughly 12.5 times forward earnings, although I would tell you the median stock's probably closer to 14 times. But in the North American Income Trust, we'll call it a median of 14 times. We have a dividend yield of roughly 3.8% currently, and we're having earnings growth that will likely exceed the market this year. Thank you all for your time today. We appreciate your interest in North American Income Trust. If you want further information, click on the link below or check our website out for more information. Thank you.